Hey, my name's James Wilkinson and welcome to my YouTube channel, and I'm changing my mind today on house prices in the UK in 2023. A lot's been happening over the last few months and I want to go through why I'm changing it and where I think house prices will ultimately end up by December 2023. So make sure you like this video, smash the like button over there because that really helps me with the YouTube algorithm. It'll take you 2 seconds to do that, and subscribe to the channel and hit the bell notification. We've got new content every single day, so please do that and help our channel grow. So what's been going on? Well, the last few years have been absolutely crazy. I remember in March, I think, was it 2020? We're nearly in 2024 now, but in 2020, when we looked at going into a lockdown, and it was just unbelievable. We just never thought that would happen. And I remember at that time, I thought, my property portfolio is really going to suffer during this period of time because logically it made sense. Businesses were shut, we couldn't go out, we couldn't go and see friends and family, you couldn't even view properties if you wanted to. It was a really strange and difficult time for a lot of people. But what happened was the opposite, and in fact we had two of the biggest growth in property that we have ever had. It was absolutely insane. And so what happened was people wanted more space. And I invest in an area in Hastings. And in Hastings, we were expecting house prices to basically flatline or drop. And they went up because people wanted to be not near the beach where they could go for walks and stuff like that. So Hastings, which has been fairly slow in growth over the last few years, was actually one of the highest growth areas in the whole of the UK, which was very, very interesting. Now, through that pandemic, we printed a lot of money, and I had a business that benefited from that. We got bounce back loans. I'm a business coach and mentor, and I actually coached clients and helped people save their businesses. Now, whether you think the bounce back loans were good or not, I'm telling you one thing, that a lot of the businesses that I worked with would not have survived was it not for those bounce back loans. They were an absolute saviour. We had the furlough scheme, and yeah, maybe the government went a little too far because now we're paying for it. Now, goods and services were difficult to get from abroad. Manufacturing shut down, computer chips were really expensive at the time, and that caused inflation. I remember doing some projects during that time, and we did a couple of renovations where we took a 1-bedroom flat, turned it into a studio, took a 2-bedroom flat, a studio flat and turned it into a 1-bed, a 1-bed flat and turned it into a 2-bed. And materials were getting a lot more expensive during that time. Now, we're now feeling that in everything else, aren't we? Food and drink and services have got considerably more expensive. And so the pandemic, we printed so much money. Then what happened is we got this crazy inflation, and inflation peaked at over 10%. And it's been there, and it's really stubborn, and it doesn't seem to be going away anytime soon. Now, as a property investor, inflation has its pros and its cons. Now, the pros are that if you owe debt, you owe money, then the value of that debt is getting eroded. So let's just say that you owe £100,000, which is not an uncommon amount to owe for a buy-to-let or something like that. Now, a year ago, the buying power of that £100,000 would buy you £100,000 worth of goods. But now, because inflation's been over 10% for a year, the buying power of that is only £90,000. So that's good when you owe money, which I do. I owe a nice little bit of money. So that's one positive thing. And so in real terms, what actually happened is the value of your property has gone down because of inflation, right? So if you had a 100 grand house, yes, it still might physically be worth 100 grand, but if you cash that 100 grand in, what you could buy with that 100 grand is going to be way less than you could have a year ago. I hope that makes sense, right? And so with this high inflation, what's happened is the Bank of England have got to deal with that. This is their main priority, is the Bank of England. And so their goal is to get that inflation down to the target of 2% as quickly as they can. Now, they do that by raising the interest rates. And we've had 13 consecutive back-to-back interest rate rises. We've gone from nearly 0% pretty much all the way up to 5%. I think we were at 0.1% at one stage, and then we've gone all the way up to 5% as an interest rate with 13 consecutive things. Now, that hits everyone's buying power, and it really has hit the market for sure, and it's caused a lot of people a lot of pain and stress. Now, logically, as with the pandemic, house prices should be tumbling at the moment. But what's happening is the market is fairly flat at the moment. So far in 2023, we've had a flat market. We had a drop in 2022 at the back end, which has given us an annual decline. But I'm talking in a 2023 window, the market has been relatively flat. And that's what I want to talk about today. Now, I've said for a long time that I feel the market will go down 8%, right? That's what I felt would happen. I'm changing that, and I don't think it's actually going to be as bad in this calendar year. So I'm not saying that there's going to be no drop. Don't get me wrong on that. I do think prices are going to start to go down. But since we've had the June data, and that was marginally up, I feel that the market is going to go down in the calendar year 2023 now around 6%. Now, the reason for that is I just feel that the market is so slow and how it's moving, and the data that we're listening to data points, and we could be totally wrong on this, right? So we've got Nationwide telling us pretty much this month, right now, and they've said this multiple times, they don't feel that the property crash will happen in 2023. And they have data that nobody else has. They know who's applied for a mortgage today. They know which valuations are happening this week. They know the price estimates of those valuations. They know the mortgages that they're offering in principle. They don't know the cash deals that are happening. They don't know the deals that are happening with Halifax. They don't know other factors, but mortgage lenders have data unlike anybody else. Land registry data is so lagged that it takes so long for that to come through, but even that isn't crashing at the moment. It could well be. Rightmove in the last few months have said new property listings have actually had higher asking prices than they could have before. That just shows to me that sellers aren't desperate yet. Now, this will change, and over time sellers will become more desperate as their property sits on the market. But some other data from Halifax and Nationwide is that applications for new mortgages are still high. Now, in the credit crunch in 2008, what happened was lending stopped, and that was the biggest problem. And if lending stops, I will change this belief at 6%, and that could change quite considerably, quite quickly. But right now, money is still being lent. There are schemes from the government now where you can move on to an interest-only mortgage. I think that's going to be a big deal. And what I think is more likely to happen is prices will start edging down, but there will be considerably less transactions this year. Right now, there are less listings on Rightmove than we would normally have, and there are decent applicants at the moment. So that marries up that those transactions might go through with relatively little pain. But I just feel that the people that are going to get hit massively in this market are estate agents and solicitors, those people that rely on transactions and volume of transactions to happen. They're really going to get hit hard in this market, and I really feel that now the market is just going to be a lot slower in shifting. So my prediction, it might be wrong, this is just where my gut feels right now, is that in 2023 we're going to be at 6% down from the beginning, from January through to December on an annual calendar basis, just so that's very, very clear. This isn't anything you can base your investment strategies off. But a lot of people ask me where I think the market's going to go, so I wanted to make a video, and I want to know your opinions too. I think the comments could be quite interesting on this one, so do comment below. Where do you think the market's going to go? Please do tell me in the comments. And where do you think interest rates are going to end up? We're at 5% now. Do you think we'll get to 6%? It's looking likely. If you didn't like my video earlier, do like the video, do subscribe to the channel, and now's the time to learn about property investing. There's lots of deals starting to come onto the market, and I want to train you and mentor you for just £1. So in the description, I'm going to put a link where you can grab that property training for 7 days for just £1. So click on that link and do it now. While you're here, check out all the other content on my channel, including this video right here.